Hello and welcome, everybody. Welcome back to another edition of Elevate Your Grind, brought to you by the Cannabis Lab. I am your host, Todd Rosales, and we are having so much fun here live at the Arcview event in Miami, Florida. We're meeting so many great people. Thank you, everybody, for joining us. I am joined today here by Tina Azarvand and Sara Saba of Strategic Tax Planning. See, I told you we can chew on our words here. Thank you for joining me.
Sure. Thank you for having us.
Thanks for having us.
So, as I understand it, and the reason why I invited you guys on this podcast is you were explaining to me what you do earlier today. And I've seen this going around the cannabis industry, and candidly, people have told me in the past, when something sounds too good to be true, it usually is, right? So obviously, I feel like some people might think this is not real, not legit. It sounds almost like a scam, but it's not. So because you guys focus on tax and you're a lawyer as well. So tell me about this. Why do people not understand it? And what are you guys doing in cannabis space right now?
Yeah. So just in terms of it being too good to be true and everything, I know there's a lot of misconceptions, just like there were with the PPP loans, I'm sorry. But this is actually a recycled tax credit. This is not the first time they've had the employee retention credit, which is something a lot of people don't realize. So, during Hurricane Katrina, for victims of that hurricane, they were actually able to get the employee retention credit back in 2005. Okay. A lot of people don't realize what Congress did with this under the CARES Act is they lifted that legislation. They changed some numbers, changed some of what went into ERC, but they passed that under the CARES Act. But it used to be either or, but it doesn't really matter because, of course, if you're a cannabis business, you couldn't have gotten a PPP loan since they were locked out. So this is actually the only program that a cannabis business can get because they're not subject to 280E.
Okay.
So do you want to touch more on that, Sara?
No, you're absolutely right. The 280, of course, is where it's an income tax deduction that they're not allowed to take. And I've also heard a lot of misconceptions at the MJ Biz conference. One of them was, hey, I don't qualify for the PPP, which they don't, but why can I, or how can someone qualify for this CARES Act ERC? Since they think they're kind of commingling the two, they're conflating them. And I want Tina to explain that. So.
I feel like in general, cannabis companies just don't ever feel like they have a tax advantage because we're mostly tax disadvantaged. So when a program comes around for us, we seem to be skeptical of it.
Yeah, absolutely. Yeah, so 280E, it's an income tax. It's part of the income tax code, and that prohibits businesses from taking ordinary tax deductions. So obviously cannabis businesses can't really take any tax deductions, but
no, we cannot.
The employee retention credit is not an income tax credit. It's a payroll tax credit. So it's not subject to 280E. So it's the only credit they can get. They are not locked out of the employee retention credit.
Very cool.
And also the PPP loan, there was an attestation that you're doing anything illegal under the federal law. This one, you don't have to attest to any of that. It doesn't ask you those questions. There's no special carve out for that either. So
this is awesome. So it's like a special niche in the cannabis industry can take advantage of because, like you said, they were left out of all the programs of the pandemic. Let me ask a stupid question here. Like, was this something that existed before? Because you said during Hurricane Katrina. So is this just an incentive for companies to keep employees on payroll during disasters or other things that happen in place that just so happens we can take advantage of?
Yeah. So it is a temporary tax credit. So it's available for 2020 and the first 3 quarters of 2021. So you can get up to $26,000 per employee total between all 7 of those quarters that it is available. So yeah, and it's based on the wages, tips, and certain health benefits that are paid. So it's not based on the taxes that are paid, which is a huge misconception that we get. So people will think, well, I didn't pay that many taxes on behalf of my employee, but whether you had a full-time or part-time employee, you're paying enough wages to make it worth your while.
So there's definitely a party going on behind us. But that's so that's actually
time.
They are having a great time. And this is why you really need a tax specialist to work with here, because these are the things that I think businesses take advantage of that kind of give this the competitive advantage, where it's so many disadvantages in the cannabis industry. It's nice to know that there's something out there for us. So like you said, it was available for 2020, the first 3 quarters of 2021. What are some of the requirements if a company is looking to see if they qualify for this, or like what would you ask them to see if you can help them?
Yeah, that's a great question, because another reason is that it's usually when there's a decline in revenue. However, even if there was an increase in revenue during that time period, you could still qualify. And those are because there's a partial or full shutdown orders from the government. It's either shutdown, or they would say they had like for cannabis industries, like you couldn't go in and smell the sniff jars, or you limited capacity in number of people that can come into your shop, or temporary shutting down your shops, or the supply chain interruptions, things like that, or you have to do extra time to clean and sanitize your shop. So there's different reasoning for that. So I've also heard some common objections like, well, my accountant told me I made too much money. But that's not the case.
I think if your accountant ever tells you make too much money, you need to get a new accountant.
Like,
right. And so there's a lot of common misconceptions. What we like to tell people is that we do second opinions, because if they ever got denied because of those reasons, because it is ins and outs of this. It's very specialized.
yeah. And so one thing I want to touch on with the program. I'm sorry, I just lost my train of thought.
Happens to me all the time. There's a party behind us, so you're good.
Just diving back into that. So a lot of that guidance wasn't even issued until March 2021 is what happened. Under IRS Notice 2021-20, not to be nerdy, but that's the guidance that came out that really provided a lot of clarity for most businesses in the US under that government mandate test. So there was an entire year that went by that this program was available, that people didn't realize they were eligible because it was unclear. So people, their CPAs at a time, they were probably correct by saying, hey, you're not eligible, because there was no guidance indicating otherwise. But once that guidance came out, things really changed. But unfortunately, CPAs, they're normal people. They don't just sit there and read every IRS notice that gets issued. Most of them missed it. I still talk to CPAs almost every single day that are like, they had too high of their gross receipts didn't decline enough, and I'm like, but they're the government mandates, like,
hey, I mean, opportunity for you guys. You guys took advantage of something that not a lot of people know about. And to be honest, I don't know how cannabis companies would know about it unless folks like you came to these events to tell us. Because again, when it comes to tax programs, we just assume we're excluded from all of them. So, I mean, I'm glad that you guys are helping. So when you talk about cannabis companies, like, who are we talking about here? Is it just plant touching companies? Is it ancillary companies? Is it CBD hemp? Like, just who? So
any business can qualify for the employee retention credit. I do want to clarify, it's not just cannabis specific. So really it can be anyone.
Got it.
So think of a dispensary that had a curfew and went to curbside only, they might get it. Or a cultivator that they had supply chain interruptions, things like that, they can get it. The companies that are here exhibiting at this conference, they weren't able to come to these trade shows to generate revenue. Most of these companies are eligible, because that government mandate test, the rule that the IRS came out with, it has to have a beyond nominal impact on your business, which is at least a 10% impact on your sales stream or your hours worked.
Very cool.
So either or, there are so many ways to qualify for this program, but people just don't realize under that second test, because most people only have a CPA. Most people don't have like a tax attorney or someone who's looking into the changes in the legislation.
In this industry, I'd be surprised if they even had a CPA, at least one that was on staff. So
yeah, well, it's true, but with that said, most people just didn't know about this.
Yeah.
So, and it's still available. One thing I want to say, people always think, oh, what's the cap on funding? There's no cap on funding with this payroll tax credit. So it's more of a statute of limitations.
Okay.
So we actually have until April of 2025 to claim at least 2021, and it's April of 2024 to claim 2020 and 2021.
Okay.
So because you have 3 years after the time a return is due to amend it and still claim a refund, and they all go back to that
Sure.
15 deadline.
So do I know a lot of sometimes a lot of executives or high level people in this industry, like they tend to start with these companies as 1099. So let's just give an example. If you were smart enough and you set up your 1099 through a corporate structure, right? Whether it's an S corp or a C corp or an LLC, if your company was a 1099 for a cannabis company and your company has W-2 employees, would someone like that be eligible as well?
Yeah, so you're not prohibited if you took 1099s. 1099s, they're not employees, they're independent contractors. So they are excluded from the program, but it's based on any W-2 wages paid. And another misconception I do want to put out there is it does not have anything to do with retaining your employees. It's based on having paid wages. So if they quit or were fired, you can still get a refund for that employee.
Well, that is a misnamed thing there.
I always say, why don't they name it the employee wage credit? Like, don't know why they said retention. People will be like, I retained all of my employees, and it's
good for you. Thank you for being a good person.
So you can still get it if someone quit or was fired, which is a really great thing about this program. And if they were 1099 and switched to W-2, that's fine. It's going to be based on those W-2 wages paid. So if anyone ever went from a contractor to an employee in that circumstance, they could still get it. They wouldn't be prohibited just because they were at one point a 1099. The 1099, any payments under that, they're not going to get.
Okay.
Any W-2 payments they can get.
Very, very interesting. So as I am not a tax specialist, nor an accountant, nor a lawyer, any of that, I'm a podcast host, and usually the things I talk about are just made up. What am I not asking? What should companies know about this program that to take advantage of it, or just anything in general? Like, what have we missed so far? Can we cover our bases?
I can't think of anything. I mean,
I would say one big thing about it is to be careful of what company you work with, on this.
Please.
There are a lot of unauthorized companies out there doing this type of work right now. The IRS actually issued a warning back in October about companies that charge like percentages and upfront fees, and they're just qualifying anyone, So like for us, we've got a dedicated research team of over 30 people who just focus on those government mandates and making sure that everything's good, because we're signing the returns as a preparer too. Like, you don't want to be in any trouble. But I would say definitely be wary of, in the sense of, if something's too good to be true, if someone's saying like, oh, you're going to be qualified no matter what, the maximum amount, they're not mentioning your PPP loans, which need to be offset. There's no double dipping, by the way. Those are some serious red flags, and just like watch out and make sure you're working with the right company, because, in the end of the day, you're going to be the one on the line. So just do your research and watch out for people charging percentages and upfront fees, because that's not the norm.
Awesome. So this way I don't have to respond to all the people who I definitely assume are scamming me in my LinkedIn inbox. How do we get in touch with you guys?
Yeah, so you can email either of us. So I don't know if there's anywhere we can put it. I know I have a difficult last name. My email is tina.azarvand@smartertaxplanning.com.
And I'm Sara, SARA.SABA@asfrost.com.
Yeah. And then you can give us a call at 443-445-0051. One thing I do want to mention, if you're interested in reaching out, is we do our analysis for free. So we're going to look at your profit and loss statements and see if you meet that gross receipts test. And we'll also have an interview with you, see if you're going to meet that government mandate test. So we'll be able to tell you how many quarters you're going to be eligible for and estimated refund, all of that, before we even send you an engagement letter if you chose to move forward with us. So it's very risk-free.
And there's a deferred payment.
Good point. We don't charge upfront fees.
Beautiful.
So, yeah, we defer our payment until you receive your refund checks.
So skip your LinkedIn inbox, contact them. Sara, Tina, thank you so much for joining me today.
Thank you for having me.